What's really fascinating is it's actually from the failures and the losses that I think people learn the most.
Yeah, the transparency, and it was really hard for me to, I'm old school, right? So money is very private. Now, we grew up in a family where I shared a lot with the boys that, a lot of families won't do, but even that, to go public, it was hard, but now that I've done it, it's not hard.
Hi there, I'm Mike Larson, Editor-in-Chief with MoneyShow, and I'm coming to you from the Toronto Money Show with Brandon and Mark Beavis of the Investing Academy. Welcome, guys.
Thank you very much, Mike.
Hey, Mike.
Hi, so thank you so much for coming to the show. Tell me how your experience is going so far here in Toronto.
Oh, well, it's been amazing. This is actually our second year here. So we were here last year. It was a blast. We were so excited to come back. I think this year's been even better. I mean, I guess we kind of knew what to expect. Yeah, we had a great keynote yesterday, which was awesome. Obviously, just chatting with people. It's a long couple days chatting with all the people at the booths, but it's always a blast. And it's been a blast so far.
It's funny. It is a lot of talking, but in the world we live in, we look at cameras all day. So to actually come and meet with people, and it's very refreshing, and I find it very inspirational because you hear some really cool stories, right? So it's nice.
For sure. Now you guys are here with Adrian, Shay, and Max, right? Talk a little bit about what Blossom's doing here.
Yeah, so actually what we do is YouTubers. That's kind of our thing. We're content creators, influencers, if you will. And so are a couple of the other names you mentioned. Canadian and T-shirt, Shay, the humble trader. And over the years, you kind of build up your network of your creator pals and buddies. And we've decided to work with a company called Blossom, which is essentially a social network, a new app, a really hot app here in the Canadian market. Over 50,000 Canadians where they're sharing their portfolios, kind of like a social network for investors. So we are all involved in that app. We're sharing our stuff online, publicly sharing our portfolios and trades. That's how we're involved. And of course, we're just friends. So we thought, come here, have a blast, talk to some investors. And that's kind of the nuts and bolts of it.
Perfect. Now talk a little bit about the Investing Academy. I mean, how did this whole journey for you guys start?
Geez, well, the Investing Academy's been running since about 2018, 2019, so that was 3-4 years now. And long story short, I mean, we do YouTube and we reach millions of people every year, and there are a camp out there that do want these training programs. They need something concise and to the point. YouTube is great for information and education. But it can be a kind of big mishmash of stuff. People don't know where to go, and there's a little bit overwhelming. So the Investing Academy is essentially an A to Z program done by videos where someone can come in and they can essentially go from a complete beginner, like I've never invested before, to standing on their own 2 feet, building their portfolio, et cetera, et cetera.
Got it. Now, your panel was called "The Future of Investing is Social," and why that title, and what was your message there?
Well, maybe this will be a good one for you to chime in because we come from 2 different generations. For me, everything is social. Not just investing. I think the future of life is social. Social media, connecting with other people and learning and engaging with other human beings. That's how we learn. That's how we're absorbing content nowadays. Our career is in the social media landscape. So the keynote that we spoke about was basically looking at the trends of how investing has gone from very traditional and private and on your own to where, as time has gone on, people are more willing to be open and use that as a tool to learn from each other. That's really what I take away from it.
Well, yeah, and my background, I was an investment advisor, portfolio manager for more than 25 years. And when Brandon was 20, he started working for the firm. And the not the expectation, but the possibility was that he could work his way into the business, eventually take it over. Well, within a very short period of time, he said, "Dad, we should be doing this on YouTube," because he'd sit on the meetings and listen to the advice or whatever. He said, "You're talking to one person or a couple, and this is good stuff. We should be disseminating it to a broader audience." And I thought that was the dumbest idea ever at the time, because I was sort of old school, right? You meet in, you have your coffee or your tea, and so Brandon left the firm. He kind of migrated out over time to start the channel. And when it came time for me to sort of hang it up, we just talked about it, and I decided to join forces with him. And what a great decision, because when I think back now, the knowledge that you have to share, you share it one-on-one or with, like say, millions of people. So, and that's all just because of social media. So.
Now let's talk benefits and I guess some drawbacks. I mean, when you go public with your portfolio, guess what? Your success is shared, but so are your failures. So how does that affect the process, and what do people learn from that?
Well, you're certainly correct about that, and it does put a lot of additional stress. It wasn't an easy decision for me to open up the hood, I guess. But what's really fascinating is it's actually from the failures and the losses that I think people learn the most. So it's great to say, oh, I made X amount on this stock, or this was a great trade or exit, but I mean, just a couple weeks ago, I made a post on Algonquin Power was the stock that I sold, a big dud. Been right up as to why that was the case and why that was a mistake. And the amount of respect people give you for acknowledging those mistakes, everybody makes them as investors. They happen. That's life. And when you're able to take accountability for that and then say, well, here's where I messed up. This is where we may have not done the right thing. And then here's how we move on. I think there's a lot of teachings to be done there. Yep. So I do think that by just opening up the hood, it's like a true form of education.
Yeah, the transparency, and it was really hard for me to, I'm old school, right? So money is very private. Now, we grew up in a family where I shared a lot with the boys that, a lot of families won't do, but even that, to go public, it was hard, but now that I've done it, it's not hard. And there's, I think of if you own shares of an ETF, for example, well, you kind of have the right to look and see what is held in the ETF. So there's transparency, and if I'm going to share with people, here's my strategies, and if they're going to look at it and say, well, those are successful, I think to some degree they have the right to actually, the proof is in the pudding, right? So, I don't even think about it anymore.
Yeah, it's transparency and honesty. Sort of, again, you can't say that I made all this money if
There's too much of that on YouTube where you only see the good side. No, don't get me wrong. There's good side in what we do, right? And you can learn from that as well. But what I like best about having the portfolio on Blossom is you can give logic, give explanations as to why you make trades, and all of our trades will show up on there. So that's good, especially for a beginner investor, because they can see, okay, well, like recently I sold shares of Apple and Microsoft, great companies. I didn't sell all my positions, I trimmed down because they were too, for my risk tolerance, they were getting too big. Well, people can learn from that and agree or disagree, but at least it's an explanation. That's what you get from all the different users.
Yeah, they see the strategy and they can understand it better.
Yeah.
That's all part of the education
process. Not saying you have
process.
to do this or you shouldn't do it, but here's the strategy. Here's the logic.
Now, that brings up a question, which is sort of, what are you seeing in this market, right? I mean, what do you like? What don't you like? Is there anything in particular that that really excites you here, or that you're cautious on?
I'll start with that. Yeah. I like the equity markets. I've been an equity investor all my life. I do have a fixed income component as well. I'm 61 years old, and I think probably even younger investors should have that. But I generally like the markets as long-term investors. Right now, what is it? It is the September the 9th, 2023. And my personal take, the markets are pretty frothy right now. I think they're a little bit overvalued. So I'm being cautious. I'm not putting a lot of new money into the markets. The cash I have, I'm holding it. We'll see over the next few months. I mean, I'm not going to call this week or next week, but I think when I look at the valuation metrics I look at, I think there's a little bit of room for a pullback. So my take right now is I wouldn't be rushing in and backing up the truck. But that's, who knows, right?
Anything you'd want to add to that?
No, I mean, we just had the discussion this week. We're looking at 10-year treasuries as well. Even some of the more boring stuff, and to me, that's a more boring thing. Yeah. But that's just my generation. Sure. But like my dad said, we like to keep things kind of simple and boring and keep it going. My approach, like in my stock market, my portfolio, I've pretty much just been going steady as she goes. And you can fine tune and finesse, obviously depending on market conditions, and you should. But in all honesty, I'm more of this buy and hold approach, let it go. Like the companies I own, and I'm just going to let them go for the next number of decades is my goal.
I guess I'd wrap things up by asking about the change in the last few years. I mean, obviously a bunch of people, when everyone was locked down with COVID, you had this huge surge in trading interest because people couldn't do anything else. I'm curious, now that we're past that point, what are you seeing from your community? What are people talking about, and how's the growth of the audience here?
Really good question. That was a crazy time for us. It's funny, most businesses struggling, shutting down, this or that. During COVID, that was like some of our best years. So as you can imagine, everyone's at home learning to invest, especially
government benefit money.
Government served money coming in, and then you have GameStop, AMC. So yeah, that meme stock was an insane boost for us. I think that's great that it brought so many new investors to that was for many people's first time experience to investing. Yeah. In my opinion, it kind of drew them in for the wrong reasons, and I think that has started to fizzle out. Yep. So obviously the markets have corrected, and a lot of these small cap sectors have been slammed for the most part after that. And I think that left a very sour taste in many people's mouth. So I think to answer your question, how's the audience been? There was a massive spike. It's kind of came back down to normal levels. And I do think that what's fascinating is like those, what do you call them? The small cap, the meme stock investors, they're losing a bit of
credibility?
Not credibility, excuse me, but the actual investors, like they're losing faith, right? They got in, they're like, this is awesome for a year or two, and then obviously now it's not so awesome. But one thing that's been steady is those who are in it for the long-term dividend investors, the buy and hold index funds, that's been steady. And that, for us, provides our audience with like a stable growth. So it's kind of like an artificial blip that we saw, but that baseline has always been trending. At least that's what I've been experiencing.
Got it. And I guess that would lead to my last question would just be, you know, when you speak to your investors, when you have questions coming in and you're responding, you know, what is your main message out there right now?
Main message is the same message I probably told to my clients 25 years ago, is I believe in investing, be an investor. We talked at a panel just recently, get started. If you're a younger investor, the most important thing is to get started. You're not going to figure everything out on day one. I'm still learning, you know, after spending my entire adult life in the business. And not only do you just learn more knowledge, but the industry changes. The solutions available today weren't even around back in the old days. So if you think I got it all figured out and just coast, it's not good. So I think, it's the market today, just whatever it is, get the ball rolling, learn as you go along, and never stop learning. Yeah.
I'd echo that. Amen to that.
I'm like, I don't have anything else to add. That's
Nothing to add.
Charlie,
Yeah.
nothing to add.
Nothing to add.
Mark, Brendan, really, thank you so much for taking time out to talk here. I've caught a lot of what you guys have had to say here. It's great to have, you know, again, to be able to talk to investors that sort of learn a different way than maybe a different generation does, and that's why the work you do is so wonderful. So thanks again for your time, and thank you all for watching.